If you own Tesla, Palantir, Nvidia, SoFi, and you're concerned how they're going to be doing into May, well, in this video, I'm going to help you understand the likely performance of these four stocks. No free webinars, just research. I respect your time, so I will cover four stocks in the order from Palantir, Nvidia, SoFi, and then we'll wrap things up with Tesla, and I'll also be giving you some option plays. Let's start off with Palantir. This stock has had some massive moves. This stock was around $76 per share, and now we're up over $114. You can actually see that I put $250,000 into Palantir 9 days ago, and I've done a follow-up video just yesterday. And I am still bullish on Palantir. I think this stock is not just fantastic in terms of its brand, but also the innovation that they are producing from within. I'm expecting to see the demand for Palantir's AI software solution jumping higher in the coming years. And here's the chart. And here's specifically what I see happening. Right now, Palantir, back in February, the stock reached about $124 per share. Of course, with Trump tariffs and lots of volatility in the market, the stock has pulled back. But now it's heading back up to its highs of over $120 per share. It's currently sitting at $114. And in the short term, it is above the Bollinger Band. So in the short term, we had a really big rise, which I made a lot of money on. But it's difficult to predict the market week to week. And I'm not even going to try to say I can do that. But I'm very confident that in 2025, this stock will be $125 per share easily. Palantir is collaborating with the U.S. Department of Government Efficiency on a project to develop a unified mega API for the Internal Revenue Service. This initiative aims to centralize access to all IRS databases, potentially streamlining operations, but also raising concerns about data privacy and security. Palantir's Foundry platform is expected to serve as a central interface for this system, which is projected to be completed within 30 days. Now, on April 10th, Palantir announced enhancements to its artificial intelligence platform, AIP, including AIP Usage Views tool, which provides administrators with detailed insights into LLM token and request usage, aiding in capacity and rate limit management. They're also having something very interesting, which is Bring Your Own Model, or BYOM, which allows customers to integrate their own large language models into Palantir's ecosystem. And also Split Transform and Pipeline Builder, which enables positioning of data inputs based on custom conditions for more efficient data processing. So Palantir is innovating. They're becoming a sticky software company. And this is why I think the stock still has more room to run, is because the valuation of Palantir right now isn't fully baked in as a software company. And yes, the PE ratio is really high, but in my Discord community yesterday, I discussed why PE ratio is very misleading, and I'll give you the quick summary of it. Earnings can change dramatically. Imagine a company that just becomes profitable. They're not going to have a lot of earnings. However, their price can be really high. And within a couple of quarters, earnings can jump up by 10x, 20x, even 100x. That happens all the time, and that has happened to Amazon, Nvidia, and basically Tesla and all the other tech companies. So the PE ratio is actually not that accurate for Palantir. What I'm specifically looking at is their revenue growth, quarter over quarter, year over year. Are they meeting expectations? And are they becoming the software sticky company that warrants a 100 PE ratio or something along those lines? And I think the answer is yes, especially because if you also look at their balance sheet, they just have so much cash on their balance sheet. The management clearly knows how to run the company. And it's actually also funny because Palantir is pretty controversial, yet there's not that much short interest. And that's because everyone is scared out of their mind to short Palantir because it's a pretty good stock to own. And even short sellers who don't really like the stock are not really shorting it because they don't have the balls to do so. I really like the setup for selling puts, and that's why my account has been gaining some steam lately. I'm heading back up to $4 million, is because I've been selling put options on companies that I want to own anyways. And for me, Palantir, I would love to own it at $100 per share. And leading up into earnings, which we don't even have that much time, I would continue to sell put options. And quick reminder, selling a put option means that you want to buy a stock. You are getting paid when you sell the put option. You get paid premium, and if you end up getting assigned, which means that the stock went down to the strike price of the put option that you sold, you have to buy. You're forced. So aka you're forced to buy the stock for less price than the current price. So selling put options is safer than investing in regular stock. So I would be selling put options going into earnings. You could sell put options that have an expiration of like right after earnings. So May 5th is going to be really critical moment for Palantir because, well, it's likely to have a big move. Palantir is already riding a wave of AI hype, but the market hasn't really fully priced in the commercial explosion yet. May 5th is when Wall Street will be forced to update their models, which is a really big deal because once earnings come in, everyone on Wall Street will say, wow, Palantir did these numbers, and that means my model needs to be adjusted, and likely the model will be adjusted higher. So if Palantir shows strong commercial revenue growth or even just raises forward guidance slightly, we could see a wave of analyst upgrades. So remember, analysts are still modeling Palantir like a slower growth contractor. And that's kind of like the old way of doing things. They're not really modeling or understanding the high growth AI infrastructure company. One thing investors aren't paying attention to is how Palantir is expanding beyond just defense. They're moving deeper into healthcare, energy, and even IRS modernization, which is really valuable because government contracts are absolutely huge. Now, that diversifies their government revenue stream and it makes them less dependent on military budgets alone. So again, diversification, cash flow, all the things I talk about in my videos as a very important key metric of investing in a high quality company. All right, let's move over from Palantir and let's talk about Nvidia. So Nvidia stock has been on a little bit of a bumpy ride, but this company is still a very attractive company long term. And let's talk about the PE ratio just a bit. I want to talk about the technicals first. Nvidia has been in a bearish trend after hitting about $147. Essentially, it's been in bearish territory. Of course, the entire market's been in bearish territory, so it's not Nvidia's fault that it's moving along with the market. But now, as the market is recovering, or at least some stocks are bouncing back, we don't know if this is a dead cat bounce or a bull trap. Can't predict the market again. But long term, Nvidia is going to do well. Nvidia has a very attractive PE ratio, very strong business. And right now, I think it's trading for a really attractive valuation. So I do have a pretty big Nvidia position, and I actually ended up buying call options on Nvidia stock. So you'll see here that I'm actually down a bit of money. So transparently showing this, but this is just paper loss. Like once Nvidia continues to rise, then I'm going to make all of this money back, which will probably happen within like 3, 6, or 9 months. Like I'm not that concerned. The stock is going to come back. And because I am trading call options at the moment on Nvidia, any like move that it has, like I've seen days that I've made like 20 grand, 30 grand, and even more if Nvidia has a bounce. So the strategy that I'm actually using on Nvidia is a poor man's covered call right now, and I'll give you some more information at the end of this video on that strategy. But basically what I think is going to happen with Nvidia is it's going to head back up to like its more reasonable level of like 130. That's because of something called mean reversion. So mean reversion is basically things go back to the way they're supposed to be. So like mean reversion, if a stock is worth, let's say, $130 per share, and that's like what investors have been trading at for a long time, unless something has fundamentally changed, then the stock is likely to be valued back at that price at some point, right? So again, short term, nobody knows, but long term, I mean, Nvidia is going to be $300 and $500 per share. Obviously not in the next year or two, but it's heading towards that direction. So within 2025, I think the stock can head back up to like 130. And I'm thinking about dollar cost averaging and buying more call options on my position because that's going to make it really easy for me to break even. And you already know Nvidia designs the world's most powerful GPU chips, essential for AI tasks like model training and inference. So there's like no doubt future growth. 90% of Nvidia's total revenue comes from its data center business, which does rely heavily on companies investing in AI infrastructure. I don't really have a concern for that because I think AI is a huge trend and AI is the future, so that's pretty obvious there. Now, there is economic uncertainty, like, some of the tariff situation. We don't know what's going to fully happen with that, and again, I'm not going to try to predict that. And it could hurt some major customers like Microsoft, Amazon, Meta, and it could reduce AI spending in the short term. I am not concerned long term. I have zero concerns on Nvidia long term. I believe that the concerns in the current market are not really going to last, and trying to time the market is obviously impossible. So I am investing hand over fist, bicep over tricep into Nvidia, and that is a position that I am confident in. So I have a lot of Nvidia, and also just 108 is a good price. I think anything under 100 is a steal. So you don't have Nvidia or you want to have a conservative play, I mean, clearly selling $100 puts, you can be, I think, like a monkey like a macaque or a chimpanzee could literally make money by selling puts at 100. And it's pretty obvious because even like the worst days, like this stock barely was under 95. So selling a $100 put and collecting income, you're likely to make money probably like well above whatever the delta says. I mean, let me show you a quick example. So if I go to trade Nvidia options, I mean, whatever the 100 put will say, like I'm going to go to sell put, and then let me go for an expiration date. Let's say I go for an expiration date like June 20. This is going to be a little bit further out in terms of the date, but just for example purposes. So if I go down to like 100, so this option right here probably has somewhat of a high delta, but it's not really, it's probably not going to be, in theory, it's 29 delta, right? 30 delta essentially. But in practice, I don't really think Nvidia is going to go under 100. Like if I had to bet right now on odds, I would say the odds of Nvidia going below is not 29%. Like it's probably like 15 to 20%. So I don't, obviously delta is calculated mathematically, but I really think that this is like a no-brainer play. Plus, like in 52 days, which is like less than 2 months, if you end up selling this put option, you're making about 5%, which, come on now, in a choppy market with volatility, if you can make 5% in less than 2 months, let's just say I think you're doing very well. All right, let's move over to SoFi. SoFi is also a no-brainer stock that I've been mentioning in my Discord community. Literally every single call, I have calls Mondays and Wednesdays, and SoFi is easy money. Like it looked really scary when it went down under $10 per share. I told everyone, relax. This company is going to do phenomenally. And it actually has earnings today. So I made a video on SoFi. If you haven't watched that, go to my channel, watch it. But essentially, they have earnings. It's going to be making a very big difference. And by the time this video is released, the earnings probably already out because I'm making this just a couple hours before the market opens. And essentially, in 2024, SoFi reported a really good year-over-year revenue increase, totaling $2.7 billion. And they achieved their first full year of profitability with an adjusted net income of $227 million, which is a lot of money. And for a first year of being profitable, this is what I mean. Companies can go from zero earnings. That you need to understand this. Companies can go from zero earnings to $227 million in SoFi's case. Again, going back to Palantir, that's why their earnings PE ratio isn't that accurate. Because look, SoFi had a PE ratio of infinite. It didn't have a PE ratio because it didn't have any earnings. And now all of a sudden it breaks out of the gate with $227 million. Now, that was in 2024. The 2025 guidance is that basically they are going to have projected GAAP earnings per share between 25 cents, 27 cents for the year, which is really good for a first year of profitability. Now, they also have really good membership growth. So the company aims to add 2.8 million new members in 2025, building on their existing base of 10 million people. This is really important because SoFi has that upsell model. I'll tell you about the upsell model in just a second. Let's just go through the technicals. This stock has exploded from under $10 to over 13, and that doesn't sound like a lot, but had you put in 10 grand, it would be 13 grand. At 100K, it would be 130K. That's $30,000 in a pretty short amount of time. Now, of course, risk management, asset allocation, all of the things that I teach within my community, how to manage risk. But even if you had like 20K, 30K, it doesn't matter. You would have made 30%. That is a lot of money to make on a stock like SoFi, which is high quality. Like this is a no-brainer play. So yeah, of course the stock was like trading for $18 per share before all the Trump tariff stuff. But yeah, once the market settles down, which it will, it's just a matter of time, we're probably gonna see the stock get to $15 per share. So I've been selling covered calls. I have some covered calls on SoFi and I plan to open up some more. Now, yeah, my average cost is a little bit higher, but that's fine. I essentially plan to buy more SoFi stock and yeah, I'm excited to do so. I'm not just saying, okay, oh, SoFi's good. No, like SoFi's freaking great. SoFi is the company that you want to invest in if you're trying to grow your portfolio, whether it's a small, medium, or big portfolio. Like if you want to scale, if you want to get your portfolio to 100K, if you want to get your portfolio to 500K, to 7 figures. Like you got to be invested in companies that have movement, that have some volatility, that have innovation. And that's basically how I grew my portfolio. I invested in Palantir early. I had Nvidia for a long time. I had Tesla back in 2020. Now SoFi is looking really attractive. And that's because like the business model that they have is, again, let's talk about the upsell model, increasing customer lifetime value. They are geniuses at this. They are deepening relationships with customers through multiple products. So SoFi enhances the overall value derived from each member because they get the member in the door, how you doing? You need a car fix. And then they hit you with, oh, you need an oil change, you need a tire change, you need this, you need that. And that's what they're doing. They have the upsell model. You come in for a banking product, you put in your money in a savings account, you think you're done, and then they're all of a sudden like, yo, you need a credit card. You need loans. You need student loan refinancing. And the list goes on. So they get you on more products. And once you're in the ecosystem, they're trying to make as much money as possible. And, with banking, it's kind of like winner takes all of someone's wallet. Like, you open up your wallet and then they just take all your money. And that's pretty much what SoFi is doing. And it's genius because, as you even see on YouTube, everyone's doing a free webinar. Nothing is free, guys. If something is free, you are the product, okay? So like Facebook was free, but like you can see Facebook makes a ton of money off of ads. Same with like SoFi, like they're getting you in the door, but then they sell you a whole bunch of stuff and they tell you, well, how about this? And how about you buy that? So that's what I like about SoFi. The business model is pretty sneaky and pretty good. And I mean, sneaky is like pretty common for all companies. They're all doing an upsell model. But SoFi is doing it in a very interesting way, and they're gaining so much momentum so fast. I think you got to be invested in it. Now, you also can think about it this way. They're getting a lot of customers, but you also don't need that many customers if you're upselling a lot, because you also just need to sell more to the ones that you already have, and they already have 10 million. So the biggest money is really made after the sale has already been made. Like the LTV, or the lifetime value of a customer, can be super high in something like, say, banking, right? So Netflix doesn't upsell, and that's why Netflix is worth a lot less than Apple, and Apple upsells a lot. Like Apple has their new iPhone, which comes out every single year. So guess who has a $3 trillion valuation? All right, let's wrap things up with Tesla and then another option play. So Tesla, 285 stock is finally recovering, and a lot of it has to do with Elon Musk saying that he's not going to be spending as much time with Doge. He's finding like, hey, I've kind of had enough. I mean, he's kind of running out of days at the same time. So he also wants to ration some of his days there, because he has a certain amount of days that he's available to like really be full time there. But anyways, he's saying, hey, I've had a lot of time with Doge. I'm going to scale back a little bit, and I'm going to pay more attention to my baby Tesla. I'm going to come back to Tesla, and I'm going to solve more problems. And of course, having the CEO, the creator, the founder, Mr. Elon Musk, is obviously going to help. And I think finally investors are like, great, I think he's going to spend more time with Tesla, and that's going to make a difference with Tesla's future. Now, Q1 2025 earnings report revealed some significant challenges for Tesla, with notable declines in both revenue and net income. So like the revenue decline was pretty wild actually. Total revenue decreased by 9% year over year to $19.3 billion, missing Wall Street's expectation of $21.4 billion. Now the profit also dropped, so net income actually ended up plummeting 71% to $409 million. In Q1 2024, it was like $1.39 billion. So, pretty big decline there. Global deliveries fell 13%. And I think the contributing factor here is declines were basically attributed to reduced demand, lower average selling prices, and production halts for Model Y retooling. However, that being said, okay, that's the reality, right? I'm not gonna sugarcoat it. I'm not gonna, kiss ass to Tesla and say, oh, this stock is the best company ever. Because when you look at the numbers, there's some troubling signs. But I will say, I'm going to put into perspective the good and the bad and give you the objective view. Elon Musk has stated that he will be focusing on Tesla, and that basically there's a lot of revenue growth ahead. The energy generation and storage segment, including Megapack and Powerwall, generated $2.73 billion, up 67% year over year. Also, huge product launch. I think this is what everyone's like really looking at. So Tesla plans to launch a more affordable Model Y and a robo-taxi service in Austin, Texas by June. And this is basically what investors are really looking at. So yeah, growth in their vehicle business is slowing down a bit, but if they, solve the autonomous driving and everyone has a Tesla taxi and everyone's trying to make money with it, and autonomous driving is like not even just United States, it's worldwide, that is going to basically be like a $10 trillion valuation. So there is a huge cookie, there's a huge carrot that he's just dangling. Elon's just dangling this in front of investors. And a lot of us are running that way because it does look likely that is possible. It's not a question of if, it's just really a question of when. When is it going to happen? So Musk expressed confidence in deploying full autonomous vehicles in select US cities by year end. But look, we're long-term investors. We're long-term option investors. So when we look at a company that is going to solve some pretty big problems and provide a lot of value for the world, yeah, the short-term picture can really, have some decline as long as the long-term picture is really bullish. If you're interested in more of my insights, make sure you're subscribed. I'm going to keep making awesome videos like this, and I'm going to keep making some trades in my Discord community that is live every single Monday and Wednesday. So if you are interested in that, we're going to have a discount for May. So go ahead, click the first link in the description, check out my Discord community and my live trades. And either way, I'm happy to continue making these videos and give you as much value as possible so you can make money in this uncertain market and retire option trading. Hit that subscribe button and catch you in the next one.